Hello everyone, hope you guys are doing good. So sorry for the delay, and so let's get back to the review. Okay, the trade which I took 2 days back. So you know, we were here at that moment of time. We were here, right? We were here. Uh, I guess not here. We were here, right? Okay, so now you can pause the video and you can mark out all the PDRs you can see in the daily time frame, because every day we have to open the daily chart and see what's the bias for the day. Sometimes you will have the bias, sometimes you will not have the bias, right? If you don't have the bias in daily time frame, then you can go back to 4 hour to find out your bias, right? So what we saw, okay, there's a breaker here. Price was moving down since last 3 days. We have the bearish candle, so it's very unlikely that we have three bullish or bearish candle, like after three bearish candle we can see some retracement, right? And also if you go back to the 8-day time frame, so we have the fair value gap right here, right? So now come back to the daily time frame. There is stats which I'm going to share right now. It will help you to find out drawn liquidity in Euro USD. That whenever you see price fails to close, whenever you see क्या कांड मस्ता ने किया तुम, मतलब बोल के आया था मम्मी को कि नहीं ये थी करने के लिए, मम्मी मेरे को कुछ बोली क्या? हाँ. So there is stats which I'm going to say right now, that in Euro USD, if daily in daily time frame, if price fails to close below the next daily candle, then the drawn liquidity is becomes that candle high, right? So this becomes our drawn liquidity. But that's the low hanging fruit we can target, right? And we also have this imbalance, and also this breaker, right? So this was is in my mind. And let's go back to the 4 hour time frame. So no, we're not gonna go randomly. If we saw that price fails to close below this low, then randomly we're gonna buy and target this wave. No, this is not how you'll do. Let's go back to 4 hour time frame to see what do we have. So in 4 hour time frame, we saw a price after moving down, after large expansion to the downside, we saw a consolidation, right? So when we saw the consolidation, price taking out this low, first thing we saw that while moving down, that price fails to close below this low, right? Again we saw that price again fails to close below this low. So we saw that price fails to close below this low, right? And we also have a fair value gap right over here. So at least you would love to see that any bearish PD array getting disrespected to target this high, okay, and ultimately this fair value gap as well, right? And the next candle I saw the price again it is finding difficulty to close above this fair value gap. Now let's see again, next candle still facing a hard time. Okay, in the next candle I saw that price closed below this inversion. Now this inversion will be responsible for pushing the price higher. So now before executing, we have to make sure that we are executing it in the right time, right? So let's go to the lower time frame, the 15-minute time frame. Okay, so in 15-minute time frame we saw that price, this was the last down close candle before this up move, right? So and price also took out the liquidity here. This is the last down close candle before this up move. So now this down close candle will be responsible for moving the price higher. So this was my entry, right, from here inside this uh, order block, right? Let me change its color. So it was blue in color, and we tapped here and we bounced, right? So that's from here. stop loss goes below this rejected low. Okay, so the nearest rejected low which you saw, and we can target this high. It was easy 3-hour trade, right? And rest you know what has happened, right? Okay, there we go. So we saw the expansion to the upside. I should not be worried about how price it has moved a lot. That's not the concern. The important thing is to understand that, yeah, from how price moved from your entry point to the target, right? After that, whatever happened, you should not worry about. Next thing you do is to wait for price to generate some liquidity and wait for your idea to align. Okay, then only you can execute your trade. Um, right, so yeah, so this was the idea. The main thing you have to keep in mind, there is a 80% chance, right, or 82% chance when price, or probability, what you can say, that when price fails to close below any low, so the next candle later on liquidity will be the candle which fails to close below any low or above highs. Okay, right, make you so let me give one more example, right here. See, this candle fails to close above this high. So in Euro USD, I'm talking about only Euro USD. Okay, it's already been back tested. Uh, 3,000 candles, I guess, more than 10 years data back tested, right? According to that data, I'm saying. Okay, so the next candle drawn liquidity, next drawn liquidity would be this candle low. And the best thing you saw that there is also a fair value gap here. So yeah, so the price again came back. Right. Now again, if you see this candle fails to close below this low, the next round liquidity will be this candle high. Right. So yeah, this is how this happened. Right. This is the best way to find the drawn liquidity. Sometimes you will not have the drawn liquidity. Like here you saw that price fell close above this high, so the drawn liquidity will be this high, but it did not happen immediately, right? So yeah, everything has to be aligned. The order block, the fair value gaps, and the time, okay, and the news events, everything has to be aligned to target highs and lows, right? So that's all from my side. Okay. Thank you.